Good morning, everyone. I am so glad you're back. Oh my gosh, we missed you. It's the beginning of a new year, 2023. And as I said in my email, we wish you a wonderful year full of prosperity, joy, good health, and hopefully some great stuff happening with your companies. We are your champion because we're a small business too. So we want to make sure that your companies are successful and are being helped with the payroll and also our webinars to give you some new information that you might not have known before. That's part of the reason why we do these webinars. So, with that, I want to have Charles begin sharing and telling us a little bit about our new wages that have come into play. We're also going to cover a couple of extra reports and things like that. Charles and I decided that at the beginning of the year, you might have some questions about how to start and how to set yourself up for success for 2023 when it comes to payroll and being in compliance. So, Charles, take it away.
Thank you very much, Saundra. So it is a brand new year, and with every new year in business, there are things that change. One of them is minimum wage in California, and we'll go ahead and go to this little tool, the Economic Policy Institute Minimum Wage Tracker. They put this into play because of all the changes in the different states, increasing the minimum wages. And so this was set up so people could look it up. And if we look at California, the minimum wage now for the new year is $15.50. And this year there is no more 25 and under is a different rate than 26 and over. This minimum wage is for everybody. And we also have other localities inside California that have their own minimum wages, like Alameda, the city of Los Angeles, and then Los Angeles County, which is the unincorporated areas. So for instance, Beverly Hills is its own city. Los Angeles County wage does not apply. Long Beach is its own city. Los Angeles County does not apply. And you can always, what I do when I don't know if my local area is unincorporated or not, is I look it up on Wikipedia and it will say right there whether it is or not. And unincorporated areas are Los Angeles County governed. So the minimum wage law for Los Angeles County applies to that. Now you can use this. What I would recommend is this is an easy way to see what local areas might have their own minimum wage. I would still, best practice, check with the local itself. They'll all have websites. California keeps all its information on the California Department of Industrial Relations website. It's a very useful tool for employers. It has an entire section devoted to employer information, not just minimum wage, but the sick policy for California and so on. Now you see this here, and you see it says $15.50. How do you change it on the employee? Well, while I was talking, I got logged out of Dash. As you're well aware of this, this happens to you as well. Okay, so you type it in. Okay, and you will get that if you type too quickly. Okay, so we're in here and we're going to go to an employee and we're going to change Johnny Appleseed's pay rate. Okay, so I went a little fast there. I selected him right away. And now what I'm going to do is I'm going to go to payroll data and pay rates. Okay, and we had him at salary, but you know what? We're taking that out, delete, and just hit save. And what we're going to do is we're going to give him that new hourly rate. So I'm going to click on pay rate change right here on the right hand side. And this is what you would do for employees that are already hourly employees. Let me make another adjustment here. So save. If you need to change someone from salary to hourly or hourly to salary, that would be the add button over here because it allows you to make the change from the two. But we're just playing here, assuming that what you have is an existing hourly employee was, say, $14 or $15 an hour, and we're going to change it to $15.50. So I'm clicking on pay rate change, and it brings up this window. Now here, I can select the rate change type, right? Okay, actually, let me do something real quick here because it's not coming up the way I wanted. So let's put 14 and hit save. And now we will be able to do this. And so now it says either hourly rate change or specify hourly rate. The difference between the two is the hourly rate change is how much you're changing it by, and the specify hourly rate is how much you're changing it to. The difference is the hourly rate change would be $1, and the specify hourly rate would be 15. And so I'm going to select that one. I don't have a reason for minimum rate change, so I'm just going to put other change. And then I can also put the effective date. And that's useful. So let's say you know in advance what the minimum wage is going to be. You checked the California Department of Industrial Relations website and you looked up the minimum wage. And so you said, I'm going to set this up early for all my employees so I don't have to do this last minute. You could easily make this future dated. So if we were still in November, you could sit there and go, I'm going to put January 1st, and it will change it when it's good and ready. And so I put the new hourly rate here. Okay. Now, if I did an hourly rate change, right, if I said I was going to increase it by $1, I could also do it by a percentage, right? So that's useful when you're doing, like, if you have promotions for people, I'm going to do a 3% raise on somebody. You could just, put the hourly rate change, put 3 in there, and it changes by the percentage. But again, we're doing this as of, wait, I made a little mistake there. I should put it at 1550. Okay. But we're doing it to make this compliance with minimum wage. And you click on apply change, and then you click on save, and it should update. Let's see. Let's see here. Let's go ahead and adjust this. Okay, save. Let's see. My changing it, what happened was my changing it from hourly to salary is what messed that up. So let's just go ahead and get out of here.
Charles, does that have something to do with the sync time with Dash?
No, what it is that because I did the rate change, because again, this has to do with changing from salary to hourly. Because I did that initially, it's not recognizing this because it's grayed out the pay rate change. But let me click on display all pay rates. All right. And it's actually right here. So what it may be is because I just entered this change, it's not looking at it just yet. But you'll see here that it is in here if I displayed pay rates. And it's effective 1/1/2023. I know what it is. If I go home, it's on 2022. So if I went to payroll and I went to change date, we don't have it in there. We're doing a lot of stuff you really don't have to worry about. I just want to be able to get to where we can see this in here. So bear with me just a second. Okay, check date. And we'll hit save. All right. So, and I'm sure some of you have called in where you had to go, I need to add a check date. Well, this is what we do when we add it. So as we go in here, we add the check date, and then we go back to payroll and we would select it. Okay, and it's giving us this warning, but I don't need that for the purposes of what we're trying to do here. So I'm going to go back to Johnny Appleseed. And there we see the 1550. The reason it was showing the old one, no matter what I was doing, was because we were still sitting in 2022 in the calendar. That's all it was. Sorry for that, but as you can see, we do not hide from the fact that there are some things that we find and we work around as we go. So it's better to see that, because when I talk with people, and they sit there and they go, I don't know how I'm getting into here. We run into that too, where we get logged out or where we type too fast and our password doesn't come up. Happens. So there you go. And in here, you still see that we got to the 1550. And that is how you change it. And as I said, you can put in the future date. So that's how you would change the minimum wage in here. And it is a 1-by-1 process. You won't have to add calendar dates usually for what you're doing. That was just a one-on in here. But you will be able to just go in here, click on pay rate change, enter it like we saw, and hit apply the change, hit save, and that does it for this one employee, and then you can move on to the next. And again, this is something that you can do at any time, so you can do it ahead of time rather than waiting until after January 1st to enter it. The other thing is this applies to the check date. Okay, so when we enter a change in here, right, if we go back to Johnny Appleseed, any check after January 1st is going to have this pay rate. It's governed by the check date. So if you need to move it, like say, if you're say semi-monthly, right, and you have your check date as being the 5th, and that covers the second half of December, you might want to put the start date to be after the 5th, so it occurs for the pay period, the first pay period of January, but the second check. So you may want to concern yourself with that, is that the pay periods are always behind the check date, and this start date here for a new rate is governed by the check date. And then moving on, there's a couple of other things that we want to talk about. Saundra, yes, go ahead.
I have a question.
Yes.
If you have somebody whose pay period is part in 2022 and part in 2023, and the minimum wage is not effective till January 1, 2023, should we show our people how to do that?
Yes, I can do that. So let me go ahead and go to, to do that, I'm going to go jump back to the payroll in the open payroll in here. Let's see here, back in 2022. That's fine for our purposes. So I'm going to select this one because I'm going to go into entry, and I'm going to go into here, and I'm going to go to Johnny Appleseed, and I'm going to click on new check. And this is how you would do it. So you would have regular pay, into, if I can find it, no, not that one, in 2 rows. And let's say you had, let's say you were bi-weekly, and 1 week is in December, 1 week is in January. So that would be 40 here under the old pay rate, and 40 here under the new pay rate. And that's how you do it. Now, what rate you would enter depends upon what rate the employee has at the time, right? So you don't have to enter what is already set up on the employee. So for instance, in this one, this employee since we're in 2022, this employee is already at 14, so we don't have to put that. But the one that is not in the system yet or is not active is the one that you enter the override rate. So for instance, what you would be doing in this case is, if you're in 2023, and you would be putting in, he would be at 1550, and the December hours would be under the old rate, and that's what you enter in the override. So that is how you would do that. And yeah, basically that's what you would do. And you just save it and go on to the next employee, whoever is affected by this.
Great. Thanks, Charles. Okay, you can go on to the next one. And if anybody has any questions about that, put it in the chat. We'll cover it at the end.
Yeah. Okay, perfect. And that's an excellent question, Saundra. I'm glad you brought it up. I hope my explanation was good enough. And then the next thing we wanted to do was go over year-end reportings, because a lot of you are asking for stuff for 2022 now that it's over. So we're going to I'm going to go back to the status, move us to 2023. Okay, I'm going to go to reporting. Now, if I wanted to run a report, say for everybody's wages, I can run the labor distribution report, and that will total it up by employee. I'm going to hit search, and I'm going to look at the hard-coded report. That's just my personal favorite. And then now this is where it gets tricky, because if you've run a payroll in 2023, then you can go here and look at previous year. If you haven't run anything in 2023 yet, you would go to year to date. because when you run a payroll in 2023, that changes the system over. Okay. So here I would sit there and go down, and I'd also sort this by name, so I don't run into anything. If I happen to have distributed labor, I don't run into employees showing up in two different places. And I click on Run Report, and it would pop up like this. And because we're sharing a video, it takes a little bit longer. And then we look at this. Now, why is it saying 7/23/2021 to October 5th, 2021? Because we never ran anything in 2022 in our demo. So the last thing we've ever run is in 2021. So that's why it's showing that. But that's also showing you if you select current year and you haven't run anything in 2023, is going to show you 2022. Because you have to run a payroll in this year in order for this to be the previous year. This to be the current year. So if you've ran your first payroll of this year and you need a 2022 report, it'll be in the previous year. If you haven't run anything in 2023, then 2022 is still the current year for payroll purposes. I know it's a little bit confusing. It just depends on if you've run your payroll this year. Okay. And you can easily see when you run the report what the period is, and just go back and select the other one. I was just letting you know, because I have had that question. Why is it showing those check dates? This would be why. So any questions on running any year-to-date reports? Saundra?
I do not see anything in the chat, so that looks like it covered that.
Okay, so we covered those two. There's a few other things I want to go over since we're here, because this is a new year, and what you should be receiving, if you haven't already, are SUI rate notices, state unemployment insurance tax rate notices. Now, if you're in California, you would have received those maybe last month. We do run a file with the EDD to get the current rates for California, but you would still want to send in the notice as soon as you receive it, just in case there's been any adjustments that the EDD did not put in that file. So it's best practice to send that. Other states we aren't able to receive an electronic file on, like Washington, Oregon, Nevada, any of those others. So when you receive those notices, you need to send them in. Why? Because state unemployment rates change based on experience. And so every year, your rate may be adjusted. So you want to get that to us so we do your taxes properly, so you don't receive a notice after the end of the quarter saying you owe taxes. Because then when it gets to that point, there may be penalties and interest and stuff like that. And we want to avoid that. So as soon as you receive those, and if you're in a state that you haven't received a notice with, I do recommend that you contact that state to find out when it was sent and if you can get a copy if it has been sent. Some of them send them late, and some of them, like New Jersey, are sent mid-year in July. So that's something we want to cover. Another thing, and this has happened this year, is the FUTA credit reduction. And what gets people confused a lot is they see credit reduction and they think, well, doesn't that reduce my taxes? No. A credit is applied on federal unemployment insurance tax rates based on the company's good standing and the state's good standing. Well, what's the state's good standing depends on is if they've taken out a loan to cover state unemployment from the feds and paid it in a timely fashion. Because of the pandemic, there are several states that had to take out loans and they weren't able to pay them in a timely fashion. Until that time, that state's credit, the credit against the regular rate, has been reduced. So what that means is that like it says here, the standard tax, the FUTA tax rate is 6%. And so it can go up to that, right? It's generally discounted to 0.6%, right? There's the original credit is 5.4%. And when that 5.4% credit is reduced and they notify the states in November, or they notify in November what those states are that had a reduced credit, that means that your tax liability has been increased for the year. and that has to be reflected on the fourth quarter return. So we don't know what that is until November, but we have been sending out notices that some of our clients have been receiving, and they've been getting them, and they've been asking this question. This is why I'm bringing it up. On the notice, it will have three numbers, $3 amounts. The first dollar amount is going to be what we've collected to date for you. Some of it may have been paid because it was due early in the year. Some of it may have been not due until the end of the year. That just depends on how much it is, but that is what the first number is what we've collected to date for your federal unemployment tax liability. Then the second number is what it is after the credit reduction adjustment. And the third number is what we will be debiting from your account on January 18th to cover the difference. So when you receive that notice, that's what you'll see on it. So just be prepared for that additional debit to cover it. And of course, if you have any questions about the notices, like I said, a couple of clients have sent them in, and I've explained them, and that's all there is. But yeah, that's what's going to happen. And the last time this happened was after 2008, and it went on for a few years until it was made in whole, because of that real estate recession. The last thing I wanted to mention today are wage-based limits. What is a wage-based limit? Well, if you happen to for federal unemployment and for state unemployment in California, what that means is that when an employee has made $7,000 in taxable wages for those taxes, then there is no more tax withheld for that tax, right? So the minute they get to 7,000, you don't have a liability for that person anymore for taxes. There's no more, for unemployment taxes. So you'll see that your tax will go down over the year, and it's going to be bigger at the beginning of the year, not just because of unemployment, but because anybody who makes over a certain amount in Social Security, the wage-based limit is set, or California disability. That happens towards the end of the year, and then when you get to January, the buckets start over. So you may have something, go ahead and show you what the Social Security wage-based limit is for 2023. And Google will tell us it's $160,200. Now that's for 2023, and that starts January 1st. So when you have an employee who ends up making over $160,200 in taxable wages, then there's no more Social Security withheld either on the employee or on the employer. But when the new year comes, we start at zero again. So, and that was everything I was looking to cover. Any questions on any of that? It's a lot, I know, but it's sort of like the stuff that we'll have questions on at the beginning of the year.
Really good, Charles. I don't see anything in the chat, but I'll bet when we complete this webinar, there may be some questions that will come up. So feel free to send us a ticket, address it to Charles, and we'll be able to answer those questions for you. How do we know our individual SUI tax rate for each company?
Oh, well, that is something that is sent to you by the state. If you don't receive it, you would contact the state's unemployment agency, and there are different names in different states. In California, it's the EDD, and all you would need from that, and you can get that get from us what your tax number is. And that's what you would need to, you would call them, go, this is my tax number, what is my SUI rate? And they would be able to tell you, or you could send them an email, and we can provide you with a tax number. You should have it in your documentation. They assign it to you when you register. And it is on the notices that you receive. But if you don't know it off the top of your head, you can always look in Dash. It is under the tax section. So I click on Dash, and we would go to Company, and we go to Taxes, and you would see it there for California. For California uses only one number. Other states will use a separate number for income tax and a separate number for unemployment, but California uses all one number, and it's in this format, three numbers, then four, and then one. And so that would be it. And it operates just like the EIN or tax ID you get from the feds, except it's specific to the state. So if you don't receive a notice from the EDD that says this is your 2023 SUI rate, it will also talk about your ETT rate as well, the education and training rate. Then you can contact them and give them your employer ID and say, what is my rate? They even have, and I'm going to show you right here. I'm going to click over here and show you this rate search, SUI rate search. You would just type in the account number and it would give you the rate. Now, I don't have anybody's number, so I wouldn't be able to look up a rate because the one that was showing in the demo company is just 1, 2, 3, 4, 5, 6. It's not going to work. But it would show you the rate not only for the upcoming year, but the last 2 years after. It shows you 3 years worth of rates.
And we found that the EDD website is pretty user-friendly. All you have to do is EDD stands for Employment Development Department, but you can get there just by Googling and doing the search and make sure it says .gov so that you're getting to the government website, not some sort of an ad. But that's how you're going to find those things. Charles is a wealth of information when it comes to Google searches. he's my go-to.
And mostly for EDD, they ask you to like register for like e-business services, but the lookup right here does not require you to register, right? So I just have this bookmarked for me. But if you do a search CA SUI rate search, you find this from edd.services.edd.ca.gov, right? You'll be able to pull it up.
Right. Okay. Well, the other thing we wanted to highlight, it's the beginning of the year, and as a company, you need to have an updated labor law poster. And labor law posters are required to be shown. The question that's come up a lot is, now a lot of people are working remotely. Is there a digital version? There is, but it's very costly. And so PayrollCentric is reviewing that topic to figure out if we can come up with a digital version for you. The one that you get if you purchase it from us is $35. It's one that goes on the wall. And I'm sure you've all seen it in companies. It's always a good idea to get an updated one. And that is for the federal labor law. Specific to the state of California or specific to what state you're in, that is another question. And that would be the Department of Labor, where if you wanted to Google that, they would probably have something for you. We also have a monthly update on labor laws, and you would get an email and in some cases a telephone call if you want it, that will give you the latest and greatest in labor law as it changes. And so it's really good to be up to date on that and have your labor law poster updated in your office. Even if you don't have a lot of people coming in, it's a good idea to have it. You never know when the labor law people are going to be coming out and taking a look if they have nothing better to do. We don't want to have those surprise visits and have a fine levied against you just because you got an outdated labor law poster. And that gives me a good segue into what's happening next week. Next week, we have our guest presenter, Linda Duffy. She is probably next to Megan, one of our highest participants coming to our webinars. When Linda Duffy speaks, people listen. Last year, she did a webinar for us on I-9s and the regulations around that. It was a really good webinar. And if you want to have a look at what that was, I recommend you go to PayrollCentric Presentations YouTube channel, subscribe to that channel so you know when we upload a new video, and you'll be able to go to her I-9 presentation from last year. But this time she's going to be talking about what to expect in 2023, and she's going to be reviewing new laws that have come in and are effective the beginning of the year, or maybe some that are upcoming in the next months or so. I really encourage you, if you've got an HR person on your staff, this person needs to be in this webinar because we are required to follow the law and be in compliance. Ignorance is not bliss. You want to make sure that you know what the latest and greatest laws are and how they affect your company. There are lots of little things like under 25 employees and over 25 employees, which of course, as Charles pointed out, does not apply to minimum wage. And Linda is an expert in the field. So I encourage you to join us next week. Well, short of having any other questions, I just want to say thanks for being part of the PayrollCentric family. We're happy to see you in 2023. We're glad you're here. We are glad to be back, Charles and I. We had fun planning our calendar for the upcoming webinars that we're planning. So please keep joining us. Tell your friends, enjoy our conversations, and also subscribe to that YouTube channel, PayrollCentric Presentations. Looking forward to seeing you all next week. Thanks for joining us today. Bye-bye for now.